Ladies and gentlemen, good day, and welcome to the Q3FY26 earnings conference call of Vishal Mega Mart Ltd. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Ms. Shikha Puri from Strategic Growth Advisors for opening remarks. Thank you, and over to you, Shikha.
Thank you. Good afternoon, everyone, and thank you for joining us on Vishal Mega Mart Limited's Q3 FY26 and 9-month FY26 earnings conference call. We have with us Mr. Gunender Kapur, MD and CEO, Mr. Amit Gupta, CFO. I hope everyone got an opportunity to go through our financial results and investor presentation uploaded on the company's website and the stock exchanges. We will begin the call with opening remarks from the management, following which we will have the forum open for question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and the disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Gunender Kapur, MD and CEO, to give his opening remarks. Thank you, and over to you, sir.
Well, thank you very much, and a very good afternoon, ladies and gentlemen. Very warm welcome to this call. I'll very briefly take you through the quarter 3/26 and 9 months of FY26 results and some of the highlights, and then we will open the call for Q&A. Firstly, on the quarter 3/26 highlights, in this quarter, the company did a revenue from operations of rupees 3,670 crores. This was a growth of 17% over last year. Our adjusted same-store sales growth for quarter 3 was 9.6%. This is after accounting for the fact that the Durga Puja sales this year fell in quarter 2, whereas last year they fell in quarter 3. So it is the adjustment of 2.1%, which we had also mentioned in the quarter 2 call. The EBITDA for the quarter was 605 crores, which was 19.8% growth over last year, and our EBITDA margin stood at 16.5%, vis-a-vis 16.1% last year. PAT was 313 crores, which is a 19.1% growth over last year, and PAT margin stood at 8.5%, vis-a-vis 8.4% last year. Now, I'll quickly move to the first 3 quarters highlights, the 9 months highlight. Now, you would recognize that in the 9-month numbers, all seasonality gets equal between the 2 years. So there is, so those are, let's say, totally comparable numbers. In 9 months of FY26, the company did a revenue from operations of 9,792 crores. This was a growth of 19.9% over last year. Our same-store sales growth adjusted stood at 10.3%. So this is the real number for the first 9 months, because the impact of Durga Puja or any other festival shifting from one month to the other has been completely neutralized in the same-store sales growth number of 10.3%. EBITDA was 1,459 crores, which was a 24.4% growth over last year, and an EBITDA margin of 14.9%, vis-a-vis 14.4% last year. PAT was 671 crores, which is a 30% growth over last year, and PAT margin stood at 6.9%, vis-a-vis 6.3% of last year. We sustained our accelerated new store opening momentum, and this quarter, in quarter 3, we opened 29 new stores. 12 of these were in South India. in the states of Kerala, Andhra Pradesh, Karnataka. We also opened 2 new stores in Gujarat, where we have a total of 6 stores now, and 2 in Maharashtra, where we have a total of 4 stores now. This is consistent with our growth strategy that we had articulated. We further opened 4 new format stores. We have a total of 10 small format stores, and these are doing quite well. For the 9-month period, total new store openings stand at 80. You would recall that at the time of our IPO, we had guided to 80 to 100 new stores every year. So for the current financial year, we will end at the upper end or slightly over 100 stores vis-a-vis that guidance. Our total store count now stands at 771 as of December end, and we are present in 517 cities in India. We added 24 new cities in this quarter. Our trading area stood at 13.2 million square feet. Our own brand's contribution to revenue has further gone up by 100 basis points and now stands at 74.5% for the first 9 months of the year. Further, our quick commerce initiative has expanded to 723 stores across 485 cities in the country, and our registered users on quick commerce have increased to 12 million people across the country. We believe that India is poised for the next wave of consumption growth, aided by initiatives such as GST rate rationalization and reforms in direct taxation, and are very optimistic about the positive impact that these changes could have on our business in the years to come. With these brief opening remarks, I would now turn to the moderator to start the Q&A session, and I would be very happy to answer any and all the questions that you may have.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Hi. Thanks for the opportunity. GK, the normalized SSG, as you mentioned, is closer to 10%. I wanted to check if this is the run rate that we should consider, or there were additional short-term weakness due to delayed winters, and even at the start of the year, there was some preponement of the which happened in Q4, which may have had some incremental impact. So wanted to check if there were some additional weaknesses in this 9-month performance.
Nothing significant. I would say that the first 9 months SSG of 10.3% is broadly our average achievement in terms of SSG, and we see no weakness around that number. Of course, every quarter there are these minor issues which impact the business either positively or negatively. For example, the last quarter there was some delay in winter specifically for the month of December. So that may have had some small impact on our business. But overall, I must also tell you that our winter merchandise same-store sales growth was also double-digit for the full quarter.
Understood. Just a small follow-up here. Can you split your growth in terms of transactions in bill size? Then of this 10%, how this is broadly divided?
Majority of this is because of increase in transactions, and half of that, or slightly less than half of that, was because of improvement in average bill value. So as you have seen in the earlier quarters also, majority of our growth is driven by transactions and consequently new footfall in the store, because we are probably gaining market share from all our competitors and the mom and pop stores.
Understood. The intent of asking this question was to because there was this GST decrease, so ideally your bill size should have improved. So that is yet to play out, right? So from that perspective, I was checking.
No, I'm saying that of a total growth, you can assume that about 1 second, just let me give you the exact numbers. 70% has come because of improvement in transactions, and 30% has come from increase in bill value.
Fair.
So those are the exact numbers.
Sure. So last question from my end. We did a winter and festive marketing campaign with Manushi this time around. So what is the intent behind such campaigns? Was this undertaken to improve our growth profile with recruitment of new consumers, or was it related to focus on improving gross margin with premiumization of our offering?
So, it is to dramatize our proposition amongst our consumers, which is to make aspirations affordable. And Manushi is aspirational for a mass market consumers in two ways. One is that she is an extremely fashionable, young, upcoming actress, but equally she has a lot of commitment to activities which are aimed at doing good to other people and also to the society at large. So she started several campaigns and several initiatives in the area of, let's say, CSR. So Manushi, in that sense, was a good spokesperson for a promise of do good, look good, right? Because she represented both the ideas. One is do good and the other is to look good. So, and I must say that the campaign has been extremely successful.
Do we foresee...
Devanshu, I do apologize to interrupt you there. If you could please join back the queue for follow-up questions.
Sure.
Thank you. We take the next question from the line of Percy from IIFL. Please go ahead.
Hi, sir. Just wanted to understand that the deceleration in growth that we've seen from 22.5% last quarter to 17% this quarter, that entire 500 to 550 bips change, is it just because of the festive timing change, or is there some other reason for it?
Largely it is a festive timing change. Percy, we have itemized the impact of the preponement of Puja this year, and that impact was 2.1%. Now that has a further impact on the EBITDA numbers for the quarter and the PAT numbers for the quarter. So I would say that it was almost entirely because of the change in the festive timings. Further, Percy, if you were to look at the numbers for quarter two, in fact, I highlighted this during the analyst call for quarter two. Our growth, same-store sales growth, was 12.8%. Adjusted for this one-time impact, it was 10.7%. Further, we had spoken about our EBITDA view, where we said that we will grow our EBITDA by about 25% YOY. In quarter two, we grew that by 30.5%. And likewise, we had guided that our PAT will grow at 30%, and PAT had grown by 46.5%. Now, we can attribute all these incremental numbers reported in quarter two to the fact that the Puja festival this year fell in quarter two, whereas last year it fell in quarter three. So almost entirely it can be attributed to that.
Got it, sir.
But
So if I average
the one thing which I'll add to further underline that point, if you look at the 9 months numbers, the first 9 months of the year till December, all this gets equalized. Then a change from quarter 2 to quarter 3, etc., or quarter 3 to quarter 2 doesn't matter. So if you were to look at our first 9 month same-store sales growth, it is indeed 10.3%. And our EBITDA growth for the first 9 months is 24.4%. And our PAT growth for the first 9 months is 30%.
Understood. So basically, so I was also doing the same thing. So averaging 2Q and 3Q, SSSG around 10%. So is that what we can expect in the near future as well, around a 10% kind of SSSG? And secondly, on the total sales growth, again, it would be about 19 to 20% on an average. So again, is this something that we can sort of take going forward in the near to medium term?
That is what we expect, Percy, and that would be our endeavor.
Understood. Secondly, can you just tell us a little bit more about what you are doing specifically and differently versus the street in order to keep the SSSG at close to a double-digit number? Because if we look at the retail space overall, you are clearly outperforming that. So just wanted to understand, one is what are the initiatives that you have done in the past or you're putting in place now? And secondly, how are you differentiated versus the retailers so that you are getting a differentiated performance?
So firstly, I would say, Percy, conceptually speaking, our proposition is extremely relevant for the Indian customers and consumers at this moment, which is to focus on making aspirations affordable. Because as you would find that the aspirations mostly led by the digital penetration or the penetration of smart mobile phones is growing exponentially. Whereas from time to time, there are affordability challenges. The fact that we bridge that gap is extremely relevant for all customers in this country and more specifically for the younger customers. Our same-store sales growth has 3 components. Firstly, I would like to mention that of our same-store sales growth, the most dominant component is upgradation from mom-and-pop stores and market share gain. Difficult to differentiate between these two, but that is the largest bucket. Then the second bucket is the increase in the average bill value of the existing Vishal customers, right? So first is new customers. Secondly, increase in the average bill value of existing customers because they buy one thing more or 2 things more. And last but not the least is an improvement in our average selling price. Now again, for the first 9 months of the year, our highest price points, which are the fashion price points, grew on a SSG basis at 14%. Our mid-price points grew at 9%, and our opening price points grew at 6%. So further we get 2% kind of growth because of upgradation, which is continuous, of customers from opening price points to mid and from mid to higher price points. So to summarize 3 parts, market share gain, both from mom and pop stores and other retail, our customers buying more things, 1 more or 2 more, and likely the increase in average selling price by upgrading customers from opening price point to mid price points and mid price points to the upper or the premium price points. So these 3 components is what drives our double-digit same-store sales growth. Now, the relative impact of these 3 is different at different points in time. But our entire business is focused towards delivering an end outcome of these three as a double-digit same-store sales growth. So, for example, when customers are, the incomes and specifically the discretionary incomes are going up significantly, we find that the impact of people buying more number of things is higher. But at this point in time, we are finding that the biggest impact, which is driving our growth positively, is volume growth, which is led by us gaining market share.
Got it, sir. My second question is on competition. Do you find that in your strongholds, the pace of competition opening doors has sort of accelerated over the last 1 year, or it continues at whatever pace it was earlier?
It keeps changing from time to time, Percy, but in the last 9 months or 10 months, I would assume that it's pretty much the same, the pace of new store openings.
Got it. Yeah, okay. Thank you very much. That's all from me. All the best.
Thank you, Percy. All the best to you.
Thank you. We take the next question from the line of Manish Poddar from Invesco AMC. Please go ahead.
Yeah. Hi, GK. So I just have two questions. First is this point which you mentioned about higher price point growing faster than mid and lower. Is this a market phenomena or this is because of company interventions?
This is totally because of company interventions, Manish. So, for example, what we are doing deliberately as an input is that in every category of ours, in every large merchandise category as we call it, every season we introduce one higher price point where the fashionability and functionality is significantly better at a higher price point. Equally, we improve. I mentioned earlier that we maintain our gross margins at the same level, and all the buying savings that accrue to us because we are buying more volume, they get invested in either quality improvement or pricing action. So we keep improving the quality of merchandise even in our existing price points and take deliberate promotion initiatives to get customers to try the higher price point. So this is totally deliberate. I wouldn't quite believe that it's a general market phenomenon.
But would you say the market is actually moving the other way around? You're trying to, because then the 10% outcome is a great outcome if the market is moving in the other direction. That is what I'm trying to get some context.
Manish, there is no real data for me to come to a definitive conclusion on that. So I can generally reflect the view in the last, not specifically in the immediate past, but in the earlier quarters where there was a pressure on consumption and so on, and there was a lot of talk, not only in retail, but the consumer industry in general, about consumption pressures. Now, if that were to be true, which I believe was certainly true, then it's unlikely that people were buying more and more expensive price points. It's unlikely, but quite honestly, Manish, I don't have any data on that.
Just one bit. I understand you are in different pockets, but are you sensing, let's say players across the street in terms of both discounting going materially higher compared to what it was last year? I understand Q2, Q3 festival was split. And on the same side, when you're talking about rentals, are you seeing any sort of landlords now wanting to prefer larger, probably more organized players compared to, let's say, a lot of new players which would have come up in the last 2, 3, 4 years? Is there any sort of trend happening on that front? These two variables, let's say one from peers wanting to get cash because and doing more discounting because liquidity is crunched, and the other part is on the rental part where the landlords wanting to take you on board. Thanks.
So Manish, on both on the more discounting, there is some evidence that that's happening, and I'll give you specifically the underlying factors for that. In Puja festival, which I mentioned earlier fell in quarter 2 this year and not in quarter 3, we had a certain situation in Assam for 6-7 days. During the peak Puja festival, when majority of the buying takes place, where a very popular leader and singer of Assam lost his life in a very unfortunate accident overseas, because of which the state of Assam was virtually shut. It had a huge impact on people. And that Assam is one of the largest states for Puja festival. And when you have shut down for 5, 6, 7 days, in the very last peak period of Puja, it does impact everyone. And therefore, in the balance period and in the balance states, people do make efforts to promote more or discount more to ensure that they are not stuck with very large inventory. Likewise, earlier in response to a question, I mentioned that in December specifically, the onset of winter was delayed by at the very least a couple of weeks, if not more. And again, as you know, winter is a very seasonal product in terms of merchandise. So people do then tend to discount more aggressively to ensure that they are not carrying forward all that merchandise, because as you know, the next opportunity to sell would be the next day of December, which nobody really wants. Now, this is what happened in the market. Having said that, I must offer a comment on our numbers. Our winter sales still for the entire season grew at strong double-digit same-store sales growth. So the two are different. One is what really happened in the market, was the first part of my response, but the second was also to differentiate what happened to us, and therefore we did not quite suffer from that issue.
Any pressure on rentals?
Yeah, sorry, Manish. You also asked me about rentals. See, rentals are relevant in the micro markets. It's not across the board, but we are not seeing any significant pressure on rentals. There are some micro markets where if there is a sudden increase in number of retailers for a very short period, the rentals go up. But by and large, it's the same, because equally there are markets where there are store closures, and therefore the rentals become a little bit more softer.
So, GK, if I had to ask
Manish, I do apologize to interrupt you. Could you please join back the queue for follow-up questions?
Sure, I'll do that. Thanks.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant and rejoin the question queue. We take the next question from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hi, GK, Amit and team. Good performance. I know that, or rather fully aware that the questions about seasonality, a lot of clarifications already offered. Just only one aspect I just want to check with you is that, let's say in the last decade plus of your experience, is it largely the same way it plays out, or is it something different which has happened this year in terms of the festival timing? Is it just as per your historical understanding, is the same template is playing out, or is there anything else you want to call out?
It's the same, Manoj. It's the same, because as you know, our festivals follow the Hindu calendar and not quite the English calendar that we are used to. So they do fall in different months almost every year. So it's a very normal thing which happens across the years. But, in the last 10 years, all I can say is that we would have encountered every kind of difference. Puja in quarter 2, Puja in quarter 3, we've experienced all the combinations. So depending on when the festival is falling in the coming period, we do adjust our buying and our promotion and advertising plans.
Loud and clear. And thank you. And the second and last question for now is, In your experiments, which you would be continuously doing on newer markets in terms of expanding the total addressable market, anything which you could call out, in terms of, any of the, let's say we can use the word laboratory experiments you're doing, which is finding, let's say, scalability? And also a linked question, because we're allowed to ask two questions, is on your comments about quick commerce, the learnings from the last few months. Thank you.
Good. Manoj, I'll take on the pilots first. Firstly, let me just touch upon the expansion into new states, which is a part of these experiments that we had spoken about. So in Kerala, we continue to make absolutely great progress. As we speak now, we have 19 stores in Kerala, which are operational, performing very well, and another 20-odd stores in pipeline. So that part is going very well. In Maharashtra, we've expanded our pilot to 4 stores, and in Gujarat to 6 stores. We have currently some feedback on performance for the last 2-3 months, but that's been largely autumn-winter. We will watch it for some more time, but keep opening 1-2 stores in spring, summer also, and then come to a conclusion on that. And finally, in our small format pilot, as I mentioned in Q2, we had 6 stores. Now we've added 4 more. Obviously, we are feeling more confident about that. So at this moment, we have 10 new stores in small format, and they're performing decently. As you rightly said, in addition to these, we are always have at least one more idea in pilot or in laboratory. So there is that also, but it's a bit premature to speak about them because they have not even reached the pilot stage as yet.
Loud and clear. Thank you so much and all the best.
Quick commerce, Manoj, very quick comment. We have expanded to 485 cities now and to 723 stores, so that's good. Our revenue continues to grow, and our contribution to the store revenue by quick commerce continues to grow. So we are going about it very systematically and in a sustainable fashion, and we will continue to build.
Thank you. We take the next question from the line of Garima Mishra from Kotak Securities. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. I just had a quick question on the store addition numbers. Now, you clearly said that you're on track to actually surpass your earlier guidance of 100 stores for the year, the higher end of the guidance. How should we look at this number for the next year? And internally, in terms of execution capability, does the organization have the capability to actually add a much larger number of stores per year as well?
So, Garima, we are retaining a guidance of 80 to 100 because, and secondly, we have further increased our capacity to add new stores. But the most important input into our number of store additions is the availability of properties which can become growing profitable stores for us that we can identify. So obviously this year has been good, and therefore we will be at the upper end of the guidance, but we would still retain a guidance of 80 to 100 because we do not think that we should be chasing a target irrationally there and end up opening stores which either do not have the opportunity to grow or do not have the opportunity to be profitable. As you know, historically in our sector in India, that has been an issue that one needs to be cautious about. So we will retain our guidance while reassuring you that we have increased our capacity. So if the opportunity does arise, for example, to open 110 or 115 stores, we would be able to execute them.
All right. Thanks for that, GK. Second question. See, you've mentioned in the notes to accounts that there was practically no impact from the new labor codes on your financials. I was a little surprised. I would have thought, there would be plenty of, fixed-term contract workers working at Vishal. So could you just, tie that around a little bit? Yeah.
So, Garima, our comment was more that it's not that the impact has been negligible, but it is not material for our results. So the impact has been around 8.4 crores so far, and that is included in our quarterly and the first 9 months results. Amit, do you want to add any comment?
No, Garima, you are right. See, most of our employees are actually on our rolls, and the impact which is coming on account of gratuity, essentially moving from 35 to 50%, most of our store employees are already covered in that 50% bracket. So there we do not have any significant impact. It's largely the managerial staff and corporate employees where we have seen an impact, and the same has been assessed and accounted for.
I'm sorry, just to confirm, this 8.4 crore impact has been booked entirely in the third quarter and should be treated as a one-off?
See, not necessarily in this quarter, but on a 9-month period, it is accounted for. See, we keep on providing every month, and then we do a YTD assessment. We were carrying this provision with us.
All right. Got it. Thank you so much.
Thank you. We take the next question from the line of Jignesh Kamani from Nippon India Mutual Fund. Please go ahead.
Yeah, hi. Congratulations for number even in tough time. Just a few questions on one on the inventory side. You highlighted the winter was big. So how was the winter inventory both at our end and our vendor end? There is one thing. Second, on the performance on the store wide, you highlighted that the small store doing very well. We already reached to 10 stores. So how is the strategy to first, you can say, consolidate, see the performance for a few months, or we are ready to, you can say, scale up from 10 stores to say 30, 40 stores in next 1 or 2 years?
Thank you very much for your question. There was some disturbance in the line, but I think I have understood both the questions. But if I do make a mistake, my apologies and please correct me. Firstly, on inventory, which we or our vendors are carrying, as I mentioned, we have achieved double-digit same-store sales growth, even on the winter merchandise that we had bought for this autumn-winter season. So we have no challenge on winter inventory. It is quite possible that the vendors in general would be carrying some winter merchandise, but at this moment I am not quite certain, because while December was a weak month for winter, as you may know, January has been quite cold. And winter merchandise is, for example, still selling, both from our stores and other stores, we believe. So at the end of the season, whether there will be a big merchandise issue or stock carryover issue in winter, I'm not quite certain. Of course, what happens is that merchandise, and I'm talking generally, not for any specific retailer, merchandise which sells in December sells at a higher price than the January merchandise in winter. Because by the end of December, early January, the sales start. So in my judgment, there wouldn't be a serious issue. There would be pockets where there would be issues. Specifically in our case, there is no issue, because even in winter merchandise, specifically this season, we have achieved a same-store sales growth, which is in excess of 10%. Second question on the small format stores. In the small format stores, our action standard or goal was twofold. One was that they should be as relevant as our current format stores. And secondly, the financial outcomes should be the same or similar Now, we are feeling more confident because per square foot revenue for the small format stores is pretty much similar to what we achieve in our large format stores. So it is indeed as relevant for our customers as any other Vishal store. Secondly, I'm happy to report that the financial outcomes are also similar to what we achieve in our normal format stores. Also, on both the fronts, we are hitting the target. But as I mentioned, even in the quarter two analyst meet, we would want to open 30-40 new such stores and then get a very robust validation of our hypothesis, and then we would increase the pace of the rollout. So it is progressing very well.
Understood. Second, on the micro market or the space specific, you can say our ramp up or the experience. You clearly highlighted that Kerala has been doing very well. In fact, right now you have almost 20 odd store in pipeline. If I remember correctly, last quarter we had almost 16 store in pipeline. So definitely ramp up is pretty encouraging there. So apart from that, which are the takeaways you are more confident and the ramp up can be much better? And at the same time, which state or micro market with some headwind and you are setting slightly slow on that city?
So, I'll just give you a sense of where are we opening the stores. Quite specifically, so in quarter three, of the 29 stores that we opened, 12 were in South India, of which 4 were in Kerala and 4 were in Andhra Pradesh. Andhra Pradesh is also a state where we are expanding, and 2 each were in Telangana and Karnataka. In the north, we opened 7 new stores. In the west, we opened 7 new stores, and these were 2 each in Gujarat, Chhattisgarh, Madhya Pradesh, and 1 in Maharashtra. And in east, we had opened 3 new stores. Now, the markets where our experience has been an outlier in terms of performance is, of course, as you rightly identified, Kerala, but it is an early conclusion in my mind because, as you know, we've gone into Kerala only in 2025 in any significant way. And Northeast, where we continue to outperform the other states. The last thing which I would say is that in all the states, our performance is pretty uniform in terms of growth, SSSG. Even across Tier 1, Tier 2 and Tier 3, our performance has been pretty uniform. So, yeah, there are some states which are absolutely outliers in terms of the upper end of the performance. But generally, we are operating in a very tight range of performance.
Thanks a lot, and all the best.
Thank you.
Thank you. We take the next question from the line of Nihal Mahesh Jha from HSBC. Please go ahead.
Yes, sir. Good afternoon, GK, and congratulations.
Good afternoon.
On the performance. 2 questions. First is, we have limited history, and what we've seen, obviously, Vishal has given a double-digit growth. But if you look at the last decade or so, and even now, despite the overall slowdown and the way peers are reporting, we've managed to report, very high SSG. In which phase was it that, say, Vishal saw a muted SSG of, say, maybe less than 5% or saw a significant slowdown? Because at this point in time, the consumer environment is not great and competitive intensity is high. And we continue to deliver a very strong performance. So if historically we've seen a weak performance, what were the additional factors maybe led to that kind of a slowdown?
So, Nihal, we have seen this level of performance at least, I would say, for the last 7-8 years. Could be slightly more. And of course, the only period, I must quickly add, where we saw a completely diminished operation and performance was during the COVID period. So other than that, we have not quite seen performance which has been in any significant way lesser.
Maybe way back in 14-15 were the years when we had a low single digit, but since then it always been double digits.
Nihal, so Amit is pointing out to me that in the years 2014 and 15, which were early days after buying this business, which was bankrupt, we had seen same-store sales growth levels which were single-digit. So you could call that a somewhat lower level of performance. But generally speaking, other than COVID, for a very long time, we've been at this level of performance.
That's very helpful, GK and Amit. The second question was on the store addition part. Incrementally, as the new stores are opening, they're on an average 14,000 square feet. So is this, say, the impact of the smaller stores that are opening, or even the regular stores are sort of being optimized in terms of the square footage that we are looking at? And just to double clarify, when we are guiding 80 to 100 stores for the next year, this obviously excludes any small store pilot sort of scaling up beyond, right? These are the questions.
So firstly, in some places we are deliberately capping the size at 15,000 square feet. I'll give you specifically where that is our endeavor. For example, in Kerala, the population is almost contiguous across the state. There are no well-defined cities. So we are finding that we will have to open many more stores than we had planned. But we are cautiously keeping the size at 15,000 square feet because they're closer to each other than, let's say, in a UP or even in Assam or somewhere else in the country. Secondly, as I mentioned, in Maharashtra and Gujarat, we are in a pilot at the moment. And since the cost structure, especially in Maharashtra and in parts of Gujarat, is higher, we are trying to improve our throughput from a slightly smaller area so that we achieve the same financial outcomes. So in that pilot also, there are some stores which are smaller in size. I would say other than these two instances, we are not looking for a reduction in size. Yes, there is one more thing which has small contribution to that number, which is I'd mentioned in quarter two call that in Karnataka, we had found that our stores were oversized. They were 24, 25,000, 26,000 square feet. And to ensure that the optical revenue per square foot does not look small and therefore lead to the conclusion that we are underperforming in Karnataka, we had undertaken an initiative to right-size the Karnataka stores. That initiative is making very good progress. And to the best of my knowledge, other than 2 stores in Karnataka, we have right-sized all the other stores. So that could also be contributing a little bit to that number.
Got it. And the clarification on the smaller stores as a part of the guidance?
I would hesitate to make a commitment at this point in time that all these numbers would be additive. So at this moment, our store number of 80 includes the 4 small format stores that we opened.
Got it. Thank you so much, GK.
Thank you.
Thank you. We take the next question from the line of Gaurav Jogani from JM Financial. Please go ahead.
Thank you for taking my question. My first question, is with regards to the revenue per store from the southern market. Now, if we calculate the basis, the breakup that we have given in the PPT, it shows, that the revenue there is around for the quarter at least around 4 crores or nearby. Whereas if you look at the northern and the eastern market, the revenue per store is a bit higher. So is it a function of because we are having smaller stores there, and is it because these store additions are also newer, which is impacting this, and probably a scale-up of these stores in the next couple of years could improve the revenue per store there?
Yeah, Gaurav, you are absolutely right. As you would have heard earlier, we are adding more stores in South, and they are new stores. So obviously, revenue per store is lower compared to the system average. Whereas in Northeast, historically also, we have higher revenue per store basis because many of these stores are feeder stores. So that is the reason why East stores have higher revenue throughput, and South stores, because they have a higher contribution of new stores, they have a lower number.
Sure. And just lastly, on the rental bit, I mean, if you look at the absolute rental, that is, the rental that is not recorded or the pre-Ind AS rental that we see, we have as a trend, the limited trend that we have seen that number kind of, going down in absolute basis in Q3. So is there anything to read specifically here? Is there any quarterly variety that happens here that you would like to highlight?
Not really, Gaurav. There is nothing specific to be highlighted in the rental. Our rent per store on a per square feet basis is by and large in the same range, and we have agreed escalations, and as and when they come up, that is accounted for.
Sorry, just want to clarify. Yes, look at the incremental rental, that is, the EBITDA, pre-Ind AS EBITDA minus the reported EBITDA. Last quarter it was 154 crores odd. This quarter it is around 150 odd crores. So, QOQ basis it has actually gone down, despite the number of stores increasing, and hence the picture.
No, so that can happen because of some catch-up or correction in some of the cases where we have renewals or escalation negotiations, but otherwise that there is no specific anything specific to be called out here.
Thank you for answering the question.
Thank you. We take the next question from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Thank you for the opportunity. My first question is on SSG. Your press release mentions that reported SSG for 9 months is 9.1 and adjusted is 10.3. When can we see this gap actually merging, or is it likely to remain similar henceforth?
So, Prerna, that gap will always remain. And let me take this opportunity to firstly explain what is the gap. Firstly, we as a company are now almost 14 years old, maybe slightly more than that. And every 6-7 years, we need to refurbish our old stores. So when we refurbish the stores, they are closed because we have to change the tiling, we have to do the plastering, we have to change the fixtures, cash tills, everything. So the biggest contributor, if I remember right, to that adjustment is the stores which are actually shut for refurbishment, let's say in Q3 this year, but were open in Q3 last year, right? So that is a significant part of the adjustment. The second thing which I spoke about is the resizing of stores. For example, we've completed that exercise in Karnataka. So the same store in Q3 last year was 25,000 square feet as an example, but in Q3 this year is now 17,000 square feet. So we adjust for that. And last but not the least is the fact that some of our stores every quarter have to remain shut because of the infrastructure constraints which come up in our immediate context. And these could be anything like a road construction outside the store, construction of a flyover just opposite the store, or temporary closures of some areas for whatever reason. And that is the third part of the adjustment. So our very clear view is that the refurbishment activity will continue forever. It may actually get enhanced because as the markets become more and more competitive, we will have to ensure that we refurbish our stores even faster to ensure that they look aspirational. The second thing, which is the infrastructure constraints, is very difficult to speculate upon. But my sense is that as we are building infrastructure in India, the highways, the flyovers, the metro project, the urban transport projects, these things will continue. So I'm not quite certain if the two will converge at some stage.
Understood, sir. As a follow-up on this response, would just like to understand how many stores are under refurbishments today, and on an average, when do you undertake, after how many years you undertake refurbishment for particular store?
So Prerna, at any point in time, we usually have about 8 to 10 stores under refurbishment. And typically, depending upon to the status and throughput of the store, anywhere between 7 to 9 years could be the period within which we may undertake a refurbishment.
It may become faster.
It may become faster as we move forward.
Understood. And
Prerna, I do apologize to interrupt you. If you could please join back the queue for follow-up question. Thank you. We take the next question from the line of Latika Chopra from JP Morgan. Please go ahead.
Hi, thanks for the opportunity. GK, you've kind of very well noted, what, Vishal is doing well to grab more market share. But would appreciate if you have any broader thoughts on how are you reading the consumer sentiment, on the ground. Is it that, you have to make all the more effort to drive consumer to come in and make purchases? There's a lot of talk around the GST benefits, but are you sensing that consumers are coming in and are willing to spend more? I heard you said regionally you've not seen any significant shifts in consumption, but any broader thoughts on overall retail spending, consumer sentiment would be appreciated.
So, Latika, firstly, thank you very much for your question. I'll share with you what my experience has been, and I will relate more to the recent past, which is the last 3, 4, 5 months, and not the period before that when there was an obvious problem in consumption and the sentiment. What I've been experiencing is definite optimism because of the income tax and the GST change. But I think the impact of those is yet to be seen. We are quite certain that it will come, and we are quite certain that in the last 2-3 months at least, that impact is getting camouflaged by other issues which keep coming up, whether it's somewhat delayed winter in December, or I don't want to make too much of it, but the air quality issue in North India, or the very extended monsoons in Bombay this year, where they extended much beyond Ganesh Chaturthi and so on. So it is true that these issues in the last 3-4 months have somehow not allowed the fullness of impact of the income tax relief and the GST changes to surface. But the reason for my confidence lies in the fact that wherever there were high-ticket purchase items which got impacted by GST, and you would know this better than us, like cars and so on, after the GST change, there was quite an upsurge in the revenue from new car sales and so on. So, very rationally looking ahead, we believe that the consumption demand would go up. The impact of the changes made has not been fully witnessed by anybody thus far. But, logically, when you have more money with the customers and you have somewhat lower prices, it can only impact the consumption demand positively. So that is what we are experiencing. And it is also further based on our sort of gut feel, based on what we see in the stores, etc., every day. But on the positive side, Latika, I must also tell you that, as I mentioned earlier in response to a question, our objective of continuously upgrading customers, we are seeing satisfactory progress on that front. And in the first 9 months of this year, for example, I'd mentioned that a higher end premium price points witnessed a same-store sales growth of 13 to 14%. Mid-price points witnessed a same-store sales growth of 9%. And the lowest or the opening price point saw a same-store sales growth of 6%. Now, that obviously is a sign that better products at somewhat higher prices, still affordable, still aspirational, are succeeding in this current environment.
That's very clear. And the second thing I wanted to check was, these smaller format stores that you're piloting and also, some of the new states that you have ventured into, is there any meaningful difference in the product mix, revenue mix between the three core categories that you lay out? I'm just trying to understand, whether the gross margin profiles are materially different or it's easier to sell, more standardized products in FMCG and general merchandise versus apparel, which could be a lot more, have regional flavors.
So, Latika, we've seen a clear trend in the small format stores, which are in the smaller towns. The higher price points are not selling all that well in the smaller towns. In fact, the contribution of the lower price points is very significantly more than the higher price points as compared to the larger towns. So that is one clear difference which has stood out so much that we have now fine-tuned our merchandise to represent more of the lower price points. That difference is very, very clear. Equally, the higher value-added products, even in FMCG, their contribution is lower as compared to the larger towns. For example, even value-added detergent powders or more expensive toilet soaps or more expensive shampoos, etc., have lesser traction, but that is to be expected. So it appears that pricing, the absolute level of pricing and not quite the value, is terribly important in the smaller towns. So that's one difference that we've noticed. The other thing which has stood out for us is the traction that we are getting in Kerala, and specifically for our fast fashion merchandise and clothing. That is quite good compared to what you would expect.
Understood. Thank you so much and all the best.
Thank you very much, Latika. Thank you.
Thank you. Ladies and gentlemen, we take that as the last question and conclude the question and answer session. I now hand the conference over to the management for their closing comments.
Well, to all the colleagues on this call, firstly, thank you very much. I really look forward to this session. It is a good learning experience for all of us also. And I also thank you for your understanding and generous comments. We remain grateful for that. These are very, very inspiring for us. And last but not the least, I will take this opportunity to wish you and your families a very, very happy New Year. And I look forward to seeing all of you at the next available opportunity. Thank you very much.
Thank you. On behalf of Vishal Mega Mart Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.